Hey everybody, this is Jim at SP500chart.com. It's about 6:40 in the early evening here on January 21st, 2014. Let me read this to you, then we'll take a look. The website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out here on a 30-minute chart, all I've got to say really, I could put it in the simplest of terms. This is a market that's still trying to make up its mind. It's trying to find its way. It seems like buyer and seller are pretty equally matched, have been for the past 3 weeks. Had one little spell of selling here, but then that was equalized by a rush of buyers coming in to take it off of this 1815 low. And we can see where, with the exception of this trend line that really kind of got walked around on today, most of the trend lines that we've got on this 30-minute chart seem to be making pretty good sense. But we're still just bouncing around inside of them and not really committing to either let's get it over with, let's lose 50 or 60 points, come on down to 1790, or let's get on with it, let's head on up for the 1880s. I don't think we're looking at a huge move when it happens, but right now we have yet another day of the S&P failing to give us a clear signal. Is it up or is it down? Now, excuse me, I will say that we have clear resistance right at about 1850, and if that line gets taken out, if the S&P can get over 1850, I believe it will put on at least 32 to 33 points, and make it probably just a little shy of a minimum 2% move to the upside. But it's got to get over this 1850. Tried early today, failed. And where did it fail at? Well, it failed at a back test of this ascending wedge pattern, that even though we've been back inside that pattern since we've broken down from it for the second time, have not gotten back into that pattern yet. That's not a huge deal. It's a small pattern, but it's still there. But what's interesting to note is the fact that it still has a basic kind of inverted head and shoulders shape to it, and I'm going to kind of hold out on that and think that we may see the strength that we need to see to take out 1850. If not, then a move that would take out this rising support line would likely take us down for at least a back test of our resistance line that broke back in the middle of December. And that would be at about 1808. I would see that as being a decent spot to maybe expect a bounce. But if we break this line right here, I'm kind of thinking we may get an initial bounce here, a back test, but I think that should be setting up a little bit more downside than just that 1808. But we'll just have to make that call when we see it. Looking at a 5-minute chart, the last 4 days have been pretty much a picture of indecision. We're right where we started about 4 days ago, a little higher, but not a whole bunch. And I really do not see in the 5-minute or the 10-minute chart over the last 4 days, I'm not picking up on anything right now that seems to indicate one way or the other. That could change tomorrow and the next day, but for now, this just looks like a market that's come up against 1850 resistance again. Doesn't want to really sell off hard from there, but it also has yet to mount the strength to take it out. So clearly, this makes this 1850 line, what we saw today, even more important, and it makes it more technically significant if that line gets taken out. If anything, if you're saying, well, Jim, do you see anything that looks bullish in the chart? Well, let's just look at it real quickly on a 3-minute chart. We came up to roughly not quite 1850, close enough. Came down, flagged for for a fraction of an hour, and then came down again. This is a flag that would be considered flying at half mast. We then made a little double bottom, broke back up, and now we may be, just maybe, and this again is a tiny pattern, but maybe this is a small continuation pattern. We'll know tomorrow. If this serves as a continuation pattern, then tomorrow we may get another move to challenge 1850. So guys, nothing looks broken, but I'll be honest with you, nothing looks particularly fixed either. It's just been a sideways journey for the past roughly 3+ weeks, and this got to resolve one way or another, because our 1850 line has a date with destiny in early February with our rising support line. By then, something's got to give. We can't, there's no room, there's no room to trade past February 4th without one of these lines having given way. So guys, that's it. Pretty simple. We're really in the same situation that we've been in for the past 3 or 4 days. On the plus side, even though we did dip underneath this trend line, we closed above it. So that's a mild positive. But again, 1850, that's the line to watch. Take that out. I think we're in the low mid 1880s. This rising trend line down here. Take this out, and we may be setting up a move down to at least the low 1800s. And if support fails at this line or this line, then the next place we would expect to get picked up would be down in the 1780 to 1790 range. So guys, there's your video for January 21st, 2014. Thanks for watching. I wish we had something more solid to look at. If you have a better idea than what I'm seeing here, please let me know. I'm always open to suggestions. So, thanks for watching. Take care.